today on meta model taxonomy improvements for 2025. We're very happy to have some great speakers with us today. But before we get started, I'm going to cover a couple of logistical points. If you have any problems with technical issues, please email us at support, SUPPORT, @xbrl.us. And as we go through the presentation, please submit questions to us by using the Q&A link that you see on your screen. Just post your question there, and we'll take them at various points during the discussion. We are offering CPE credit for today's program, and we'll be taking CPE questions at 3 points during the program. So if you've requested to receive CPE, please make sure that you answer those questions as they come up. With that, I'm going to see if we can go to our next slide, and we'll just talk through our agenda items. So we're very happy to have with us today David Shaw. David is Senior Project Manager of XBRL at the Financial Accounting Standards Board. Dave is going to kick us off with a history, purpose, and relationships overview. We're then going to take a couple of CPE questions, and then we'll go back to Dave, who's going to cover updates for the 2025 taxonomy, accessing the meta model demonstration. We'll then be turning the screen over to Campbell Pride. Campbell is President and CEO of XBRL US, who's going to give a demonstration. And then finally, Dave Shaw is going to cover proposed new relationships. And we'll have our final CPE question. So be sure to stick around for all the CPE questions. And with that, I'm going to turn it over to Dave Shaw.
Thank you, Michelle. Okay, so first up, there we go. Sorry. First up, to read this disclaimer, the views expressed in this presentation are those of the presenters. Official positions of the FASB are reached only after extensive due process and deliberation. And with that out of the way, I'm going to give you a brief history and purpose of the meta model. And so with that, traditional relationships in XBRL have predominantly focused on the presentation of information and lower order validation. The meta model is intended to provide more expressive relationships that get to conveying the semantic meaning of the elements, largely through the assignment of traits or attributes, and by also providing accounting relevant relationships. The intent of the meta model is to assist in element selection and searching for the elements included in the taxonomy, facilitate the writing of business rules and for validation checks. And we can already see that in play with the meta model, as there are several DQC rules that are now leveraging relationships included within the meta model. It also is very helpful in identifying inconsistencies in taxonomy modeling. We do want to stress that the meta model is intended to have a positive effect on preparers, largely by providing a means of better element discovery through the articulation of the element properties. Longer term, it could provide preparers with the means of anchoring extension elements that's more expressive than the currently available wider, narrower relationship, which is used in the ESEF filings in Europe. And it's actually an available relationship within the EDGAR system. But the issue is that wider, narrower is a bit vague, whereas the relationships included in the meta model are far more precise. And so that as we see as a longer term goal for the meta model. And I cannot stress this enough, but it's not, current processes should not be affected. This is all additional information to the taxonomy. We're not taking anything away. We're just providing more information available to all users of the taxonomy on the preparer side, or even the data users on that side. So next, so as far as the history of the meta model, so in the fall of 2022, we published more like a proof of concept than a beta version of the meta model for public comment. It largely took what Campbell Pride had put together and ensured that we could actually publish out a meta model. Fast forward to the fall of 2023, we published an updated proposed meta model And that was still very much in a beta phase. You could argue that even the current one is a bit in a beta phase, but it was still very much beta. But we went ahead and included it with the 2024 GAP taxonomy, as we saw that was an important milestone in the development of the meta model. Last fall, we published a new updated proposed version of the meta model. And as I said, it is much more inclusive of elements in the GAP taxonomy. But since then, as I've been looking at, there's a lot more I want to add to it to make it more complete. And so I'm happy with the progress we've made. I'm really happy with where it is for the 2025 GAP taxonomy. But want to keep seeing it grow and improve. And so now I will turn it back over to Michelle for the first CPE question for this afternoon. Michelle?
Great. Thanks very much, Dave. Okay, so our first CPE question should be appearing on your screen right now. When was the updated proposal of the meta model that was included with the 2025 GAP taxonomy published? Was it the fall of 2022, the fall of 2023, or the fall of 2024? I'll give you about another 30 seconds for that. And also just a reminder that if you have questions, post them in the Q&A link on the screen, and we'll take those as they come up. Okay, just about another 15 seconds here. Okay, I'm going to end the poll. And just so you know, the correct response was the fall of 2024. Okay, back to you, Dave.
All right, thanks, Michelle. And so now we are going to do a deep dive on all the relationships that are included in the meta model. So on this first slide, I just have all 10 of them listed out, and we will take them one by one, and I will provide explanation on all of them and provide an example. But before I do that, I did want to just show this illustration that I created to really emphasize the point that the relationships in the meta model are really designed to work in concert of each other. It's not always perfect harmony, but that is really the intent of these relationships. And so I've kind of created this to show how they can group together to provide useful information to the users of the meta model. And I've specifically chosen examples for the relationships that really highlight that synergy that's created with these relationships. So the first one up to cover this afternoon is the instant accrual relationship. And so that is the relationship between an instant element and a duration element that's an accrual. So the provision of expense or income against the instant would be typically an asset or a liability. And so that accrual would be a non-cash transaction that's booked to an instant account. And so for this relationship, the source or parent element is instant, and the target or child element is the duration element within this relationship. And so the benefit to providing this relationship in the meta model is that it provides explicit linkage between the expense and the contra asset or asset account. This ensures that the balance is flowing into the applicable contra account, so checks can be made. And also it can assist users in identifying non-cash adjustments. So the next relationship to cover is the instant contra. And this relationship is between the two instant elements, the instant and its offset. And as I said, both elements in this relationship are instant. And for this relationship, if the source or parent element has a debit balance, then the target or child element will have a credit balance, and vice versa applies. And the benefit to this is that it provides the accounting relationship between the contra asset and the asset or the liability and its offset. And it also ensures that contra accounts are properly classified by users. So these contra accounts should not be, if it's contra asset, it shouldn't be used to report liabilities, or if it's a contra liability, it shouldn't be used to report assets. And so the example we have here listed on this slide, it shows how these two relationships work together in concert to provide that information. So at the top, we have finite lived intangible assets gross, and that has an instant contra relationship with finite lived intangible assets accumulated amortization. So the accumulated amortization is contra to the gross assets, as we as accountants all know that. And the amortization of the intangible assets, that's the instant accrual into the contra account of accumulated amortization. And so accountants all know that this is how these relationships work, even though this isn't really presented in the financial statements, and it hasn't traditionally been conveyed in XBRL accounting taxonomies. But that's what we're changing with the meta model is providing these more explicit relationships of how these elements relate to one another. Okay. So the next relationship to cover is instant inflow. And this is another relationship that has a parent instant element and a child duration element that flows into it. And for this relationship, if the instant element has a debit balance, then the associated inflow element will have a debit balance. And conversely, if the instant element has a credit balance, then the associated inflow element will have a credit balance. So the benefits in providing this relationship, it provides the accounting relationship between elements that represent inflows or increases to instant accounts, which can largely be thought of as balance sheet accounts, but it is more expansive than that. And it's also very helpful in delineating between cash inflow elements and non-cash accrual elements. So for sort of validation, ensuring that cash inflow outflow elements aren't used in the statement of income, as just one example. And next we have the yin and yang of this relationship, the instant outflow. And this relationship indicates that it's between an instant element and the outflow duration element. And so for this element, it varies that if the instant element has a debit balance, then there will be the associated outflow element will have a credit balance. And conversely, the instant element with a credit balance will have an associated outflow element with a debit balance. And so just like the benefit on the instant inflow, this provides the relationship between elements that represent outflows or decreases to instant accounts, largely balance sheet, and it delineates between cash outflow elements and non-cash expense elements. So the example we have for this is for the cash. It has a instant outflow relationship with payments to acquire property, plant, equipment. So that's an outflow of cash to make that purchase. And the proceeds from the sale of property, plant, equipment, that has an instant inflow relationship because that would represent an increase to cash. Okay. So the next three relationships, I'm going to cover these all kind of together because they really are designed to work together. And these are very important and powerful relationships because this is where we get to conveying the applicable traits to the elements included within the taxonomy. And so it's done through this series of relationships. And so the first one, we're starting out with the trait domain. And so the target domain element, so the child, that contains the list of values for the source trait type. So that trait will be some, whether it's operating, non-operating, tax classification. We'll get into examples of that, but the domain will have the trait will point to the domain. We also ensure that we check against to ensure that no concept that has a trait concept relationship is having multiple traits from a traits domain applied to it, so ensures that we don't have conflicting information. And this relationship is between two domain item type elements, which can be thought of as typically members are what are domain item type elements. And as opposed to the other ones, which the other relationships that I've covered to this point, those have all been primary elements for which facts are reported against. And as I mentioned, these three relationships work together. So this works with the domain member and the trait concept relationships. The domain member relationship, it's being used in the way that's defined in the XBRL Dimensions 1.0 specification. So when you're doing any sort of dimensional breakdown, you have a domain with its set of members, which is the the hierarchical representation of what the values can be reported against, and so we're using that in a similar fashion for this purpose. Okay, and then the last part that I mentioned, the trait concept relationship. And then this is where the rubber hits the road, where we're actually applying the traits to the concepts in the taxonomy, to a singular element. And so I just listed out some of the traits for which we've applied to elements. So whether it's operating, financing, investing, current, non-current, so forth, that's all conveyed through this relationship. And so that trait is conveyed with a domain item type element, a member, to a primary element. And so that's the relationship. And we'll get into this with another example, but this relationship also works with the class subclass relationship in providing inheritance of traits. And so we'll have an example to illustrate how that works. And so the benefits of providing these relationships in the meta model is that it allows users to search for elements based upon the accounting of traits that have been assigned to them. You can auto-generate lists of elements based upon the traits you're looking for. And it also ensures that conflicting accounting attributes are not assigned to an element. And so here we have an example of how that works. So starting from the top, we have the debt guarantee trait, and that has a trait domain relationship with debt guarantee domain. And so the members in the guarantee domain are secured debt or unsecured debt. And commercial paper has a trait concept relationship with unsecured debt, as commercial debt possesses that trait of being unsecured. Okay. So as I mentioned, the class subclass relationship also works with this. And so this relationship is very fundamental to programming or inheritance models and accounting models. And what this relationship says is that the target or child element has the same attributes of the source element with further qualifiers. And I'll get into a couple of examples to help illustrate that. And so the real benefit of providing this relationship is that it makes it easier to convey traits to elements. It's largely a scalability means of providing these traits to elements. Okay. And so so here's a class subclass relationship. So going back to our debt trait, whether we have secured or unsecured debt, there is the secured debt possesses the trait of being secured, and so that's why it has a trait concept relationship with secured debt. And secured debt has class subclass relationships with secured debt repurchase agreements and secured debt dollar rolls. And so those two elements possess further qualifiers from the secured debt. All three of them are secured debt, just that the subclass elements are more specific types of secured debt possessing the repurchase agreements and dollar roll attributes. Okay. So the next relationship included in the meta model is the concept dimensional equivalent relationship. And the reason for including this relationship is to identify where we have concepts that can be equivalently conveyed either using a singular primary line item or by using a combination of dimension, member, and higher order element. And so the example I have for this is convertible debt. That is the parent element of this, and it has a relationship with the long-term debt element. And it's got the label long-term debt type axis, and they're convertible debt member. And so you can synthetically create the same concept by using long-term debt and dimensionally qualifying it with that axis and that member. And so the benefit, this has got a couple of benefits. So the first benefit is ensuring that if within a filing, both methods or both sets of elements are employed to tag facts, that for any for where that time intersection is for the same period, those values should be the same. Conversely, if a data aggregator or user is looking at the information, this helps them identify all of these related or all of these equal relationships so that they can make sure that they pick that up in their analyses. And so we think that's really helpful to do that. Okay. And so last but not least is the aggregate other relationship, which is a new one that we added for 2025. And the reason why we added this relationship is to clarify and explicitly define which concepts represent the other portion of a total or aggregation to ensure that users understand that the other is not a standalone value, but part of a broader aggregation. And so for this relationship, you're going to have an aggregate parent element, and the child element will be the other component in that aggregation. And so for this relationship, both elements will have the same period type and balance type. And the source element or parent is the aggregation point, and the target element or the child is the other component to the aggregation. And the big benefit on this is to clearly identify which elements represent aggregation points and which ones represent the other component of that aggregation. You can't just report other. At that point, what you're reporting is an aggregation, an aggregated total. So I have an example to illustrate that. And so on the left, you can see we have this aggregate other relationship between assets non-current and other assets non-current. So that is the other component of that aggregation. On the right-hand side, we have a partial balance sheet. And when you see current assets, it's broken down into its component parts, which include the last line of other current assets for 20. And so that is the other current assets portion of that aggregation. When you drop down to the non-current assets section, you see that that amount is provided in aggregate. And so that value should not be tagged using the other assets non-current because it's the only component listed. So at that point, what you're really reporting is the aggregate amount, which should be tagged with the assets non-current element instead. Okay. And so with that, I will turn it back over to Michelle for the next CPE question. Michelle?
Great. Thanks very much, Dave. Okay, we're going to take a CPE question, and then we do have an audience question. We'll take that too. But
Okay.
let's do the CPE. All right. Okay, you should be able to see this on your screen. Which of the following relationships identifies where the provision of expense or income accrues? Is it instant accrual, instant contra, instant inflow, or instant outflow? We'll take about another 30 seconds for that. Okay, just another 15 seconds. Okay, I think we're going to close down this poll. And the correct answer was instant accrual. So let's go to our audience question. When thinking about relationships in a graph-like representation like this, sometimes it is good to consider whether they are transitive, symmetric, acyclic, etc. I can see that none of these relationships so far are symmetric, but wondering if class subclass is transitive and therefore would normally be acyclic. Dave, I don't know if you want to answer that, or Campbell could also jump in on too.
Yeah, Campbell, feel free to chime in on that. Because I'm not really sure.
Yeah, so I can kind of answer that. Relationships are primarily accounting relationships. We haven't these are terms that are typically used in like OWL or RDF to indicate that the nature of the relationship between two things. So we haven't gone through and put those classifications on them, but that's probably quite a good idea to do that. So for an example of that, if like country A borders country C, then that also implies that country C borders country A. So the definition of the relationships themselves is pretty specific. So we could go through and indicate that if that would be of use to people. We haven't really just gone through that exercise, but I suppose some of them could be. I can't think of any that would be transitive at the moment, but we could certainly go through if that would be helpful for folks.
Great, thank you.
Yep, thanks, Campbell.
Okay, so that's our CPE question. We'll have two more at the end of the program, so I'm going to turn it back to you, Dave.
Okay, thanks, Michelle. All right, and so the next section, I'm going to talk about updates for the 2025 taxonomy. Now that we've gone through all of the relationships, and so here it's just kind of by the numbers, what we how those relationships expanded from the prior version. Because going into last year, our goal was to make it more encompassing of the GAP elements, to make it more useful to the users of the GAP taxonomy. And so, so by the numbers, we increased instant inflow by 200, instant outflow by about 90, instant contra around 30. Instant accrual was only 6 because I think we pretty much have all of them identified. There's not much. I don't think there's any more left. If anyone, I encourage you to take a look at the meta model, and if you see anything missing, feel free to reach out. That's appreciated. We do want to get more people looking at it and telling us what they would like to see added to it. The new aggregate other relationship, we added 150 relationships for that relationship type. For the trait domain member, and trait concept relationships, there's approximately 2,000 new relationships for that. And so coupled with the additional class subclass relationships, we've applied a lot more traits to included elements. Traits that we added for include in areas around debt, taxes, derivatives, payables, and accruals. And during my live demo, I'll try and show this, but we try to align with the traits named in the elements of financial statements, which is identified in Chapter 4 of the Conceptual Framework for Financial Reporting. But we actually ended up with 15 traits for this, as we expanded it to be more encompassing for items such as contra accounts and metrics that aren't defined in Chapter 4. And metrics are really just mathematical summations. They're not really concepts, but we wanted to identify, this seemed like a good opportunity to identify those metrics, and so for users of the taxonomy to be able to quickly identify all of those metrics, that would be helpful. Also, the first couple iterations of the meta model for the trait elements, we did not have documentation labels, and that's part of being the beta development. And so we rectified that and have added labels for them to make them more useful, more user friendly. And so on this slide, we have just examples of some of the documentation labels or definitions that were applied to the written for the trait elements. And so there they are. You can, if you open the taxonomy, you can read all of them. Okay, so the next piece I'm going to cover is I'm going to actually just do a demonstration on how to access the meta model, because as I said, we really want to get people using it and looking at it, telling us what they like about it, what they don't like about it, where it can be improved, what we got wrong. All happy with that. And so the first way is really the basic way of accessing the taxonomy, as I would like to kind of think of it, is we have it in our TORC system. And if you navigate to the 2025 GAP taxonomy, there's an entry point, which I've highlighted on the left-hand side. Conversely, if you go to our FASB website and to the meta model page, there's you can click through and access it as well. No matter which way you go, it'll take you to the same spot. Our online viewing tool is a bit limiting in the way in which it presents the relationship, as that you do not really get a comprehensive view. You can only see one relationship at a time. And so while it's helpful, it's not as helpful as it could be. And so I want to take a little bit of time to go through an alternative means of accessing it. And that's to use the XBRL tool, Arel. And so it's open source, so it's freely available to anyone. If you have access to other commercial XBRL tools, feel free to use those. But we did want to highlight Arel since it is open source. And so what you need to do in order to be able to do that is you have to download the 2025 GAP taxonomy package. And if you go to the meta model page on the FASB website, there's a link that you click to download. And so it will download the taxonomy files in a zip. And can't stress this enough, do not unzip the files, because it is a taxonomy package that is designed to be read into XBRL software. And so on this next slide, I have a little the steps needed in Arel, and then the next couple slides have some pictures to go with these steps to hopefully make it so that you can access the meta model. And so what you'll want to do once you have Arel open is to click the open local file icon at the top left, and you navigate to that GAP taxonomy package that you downloaded from the meta model page on the FASB website. You click to open the package, and then it gives you a list of options for all the entry points in the taxonomy. You select the meta model entry point and then open it. And then you have to do a quick step to create an all relationships view. And then once you have that, you click the pane, the tab for the all relationships tab, and then you're free to navigate the relationships included in the meta model. And so what that looks like visually for you is, and hopefully you can see my cursor at the top left, you click that open button, and then it'll give you, this will pop up, and you navigate to where you have the 2025 GAP taxonomy downloaded, highlight it, you click the open button. That will cause this pane to open. You select the GAP meta model relationships taxonomy, highlight it, and then hit the OK button, and then just give it a moment to load. And then after that, this dimensions pane will open. And so if you do a right click within that, you go down to view, and then additional view, and then click on ArcRoll group, then this box will pop open, and you just select everything and click the detect. And then you got to name it. You can name it whatever you want. I went with all relationships because that was the Arel developer who walked me through this named it that, so that's why mine is that. So that will then, so once you've done that and you click OK, then all the meta model relationships will be available. And I have little, an image of what that looks like. And that's when you're free to start navigating all the relationships, which, we encourage you to do that. Really want to get people looking at this. And so now I'm going to do a live demo on it, and I'm going to switch over to Irel. Hopefully this works. Okay. So this is the Irel pane that I mentioned. And then here you can see in the All Relationships tab, there's this meta model of US GAAP taxonomy. If you expand that, you can then see all of the relationships that we currently have included within the meta model. All of these traits that we were talking about, they're all listed here. These up here above, they're kind of orphans. They don't have any assigned traits. They're just applying at this point, applying relationships. So for Partners Capital account units, it has instant inflow relationships with all of these different elements. The elements of financial statements that I mentioned, we have that here. And so you can see the different traits that we have. So I mentioned the metrics. So there's gross profit, that's a metric. Anything that's kind of a calculated total or subtotal that we've identified so far. We're still working on that. And if you want to see all the loss elements, you have those enumerated here. Campbell and I noticed that the taxonomy seems to be optimistic because there's more gain elements than loss elements. So think what that you want. Getting down to the inflow outflow, we go to assets, you go to the GAAP element assets, we find cash. You can see all of the inflows and outflows to cash that we've identified and listed here. And so it just makes it easier, to see it, giving you a more hierarchical view than what you get with when it's just broken out, or even trying to look at it in an Excel spreadsheet, which we provide on the FASB side as well. This is much more expressive and makes it easier to go through. Some of the other items where we've added relationships that I mentioned, the tax components, we have attributes for the different, whether it's tax deductible expense, non-deductible, taxable revenue, non-taxable revenue, credit, carry forward, priorities. So this is whether it's a senior debt obligation or subordinated debt obligation, and that breaks down with whether it's junior or senior, I believe. Is that in here? No, maybe not. And so we've taken the time to, we've fleshed this out. There's a lot more that still can be added, and we're working on. And for 2026, we hope to have more relationships and have provided more utility with the meta model. And so that was my demo. And so I am now going to stop sharing and turn it over to Campbell so that he can do his demo. So, okay, Campbell, I believe I've stopped sharing at this point. Campbell, you're muted.
Great, let's start sharing. Okay, as David mentioned, we've got all these relationships in there, and two of the relationships we talked about, and I'm just going to walk through those and how they work, is the class, subclass, and the trait concept. And I'll just give you an example of this. I've just brought up the taxonomy here. This is the meta model taxonomy that you can see in the taxonomy viewer. And I've just brought up cash, and you can see here, there's just a couple of places where it's appearing in the meta model. You can see there's got these concepts on it, that it's operating, and then it's at fair value. But it does have other traits as well. It has also, it's going to inherit the traits of assets current and also assets. And the reason for that is because it's in this class, subclass structure. So basically what happens with this is if there's any traits that are given to assets or to assets current, then cash will also inherit them. So if you go and look at the traits for it, you're not necessarily going to see them all. So one of the things we did was we just put this into our API, and then we're going to make this available on the web as well. I'll show you how this works. So this is just an interface to query query our API. And so one of the things we can say here, we're going to go traits of a given concept. We're going to pass it cache. So if I run this, what this will do is it basically goes out and it just basically resolves what all the possible traits of cache actually are. So you can see here, it's got the fact that cache is an asset, and it's getting this from the subclass relationship because it's a child of assets. But it's also got reported at fair value. It's got that it's current, and it's got that it's operating. So basically, we've got four different traits of cache, two that are directly assigned to it, but then two that are assigned to cache and current assets. So this way, what this allows you to do is you can query on a concept and you can get all the associated traits for it. So, I've just put some of the ones in, like dividends payable current. We execute against that one, and it just basically goes and resolves those relationships. It should come back. So we know it's a liability, we know it's an accrual, and we know it's current. So this is kind of useful because you can see what are all the attributes of a concept without necessarily having to go and look in the taxonomy and seeing what class it is. So that's one thing that you can do with it. The other thing you might want to do is if you know what given traits are, you may want to go and look those up. Now, if you go up and look up directly in the taxonomy, you're not necessarily going to get you're not necessarily going to get all the concepts that have that trait, because you're only going to get the ones that are directly related. So what this does is this resolves everything going through both the traits that are directly assigned to a concept and also what class it is. So if we want to say what are all the operating members, this is going to it's going to give you a list of every single concept that has an operating trait associated with it. So this is basically operating versus non-operating. So there's a bunch there, and I put all these in, and as David mentioned, things like the gains, you can look up that. This is basically going to say, hey, I know this thing's a gain, and I want to be able to get everything back that has a gain, and then it'll bring that back. One of the other things we're working on is we haven't done this yet, is so you can get combinations of traits together, and then it'll give you a cut down list of all those concepts that meet those. So I want all those things that are gains, all those things that are financing, and all those things that are tax carry forward, for example, because I know what that is, but I don't know what the concept is. And then it'll give you a list back of what those things are. So at the moment, we basically have it. So it's just set up so you can get individual traits, and then it resolves those traits, and also it takes into account the class and the subclasses of them. So that's kind of where we are, and we're going to make that available in the API, but then that means we can make it available on the website, and we'll set it up so you can do like multiple trait searches and then get back lists of elements that you might want to be able to use. So with that, I'll hand it back to Michelle.
Yeah, I think Dave is going to take over from now. He's going to continue on.
Yep. Just give me 1 second. Yeah, sorry. Yep, just give me 1 second. I'll get back. And yeah, the one thing, sorry, I need to share my screen. Yeah, the one thing about it is the more trait relationships that are applied, just the more useful that becomes, being able to query and find those elements. Okay. All right, so I should be once again sharing my screen. Okay. And so the last piece I really have to cover on today, before we open it up for questions, and Michelle, I know there's another program you want to mention, but the last piece I have really for today is new relationships that we're proposing to add for the 2026 meta model. And so these two relationships are called concept numerator and concept denominator. And I'm gonna have to update my earlier slide about how the relationships work in concert to add this as well, because these two relationships also work together. And so the concept numerator identifies the numerator for the source concept. So, and then the denominator identifies the denominator for the source concept, so the parent element really. So we have an example to illustrate the benefit of this, or of what this is, and that is we have earnings per share basic, and so the numerator in calculating that is net income loss available to common stockholders basic, and then the denominator in that calculation would be the weighted average number of shares outstanding basic. And so So the benefit of providing such a relationship within the meta model is that it allows a validation check to be performed. So when all three of these values are reported within a filing, they should mathematically work out. And conversely, though, if only two of the three values have been reported, then you should be able to back into the third value. And so that can be really helpful information for users of the XBRL data in identifying that. There are other means of doing that, like using formula, but that's, tends to be a little more difficult to get at. And so, I find this is going to be another really beneficial relationship to add to the meta model. And at this point, I think we've identified about 60 concepts for which we have the numerator and denominator. There's more of it, and we're evaluating to try and identify those so that we can get those added. As we've done in the past, we're planning to do an exposed update to the meta model that we plan to include with the 2026 GAP taxonomy. And so at that point, we'll have all of those relationships for these two new relationships out for exposure so that you can take a look and see what you think, see if there's anything we missed or got wrong. Okay, so with that, I'm going to turn it back over to Michelle. I forgot, we've got a couple more CPE questions. So Michelle, go ahead with the CPE questions.
Great, thanks, Dave. Let me cover a couple of the questions that we've gotten first, and then I'll go on to CPE. So,
all right.
These are questions for either David or Campbell. So, Campbell, if you want to put your audio and video on, that'd be great. So let me just ask the first question. Is there a rule that checks if a filer used the correct standard tag for the corresponding content? I've seen filings where the standard tag is not used for the corresponding fundamental information included in its definition shown in the standard taxonomy.
We've got lots of rules to try and check for people using extensions where they shouldn't. The only way to do that is by basically, if you know there's required disclosures. So relating that back to the meta model, if we know we have things and we have relationships between them. So for example, like the proposed relationship David was proposing, if you know you've got some of these calculations and you don't have the denominator and it's required disclosure, then we can say, hey, you don't have this value. It's really a matter of determining which elements are missing by inference based on what is there. So we do have a lot of rules that actually do that. So the meta model basically can help with that because then we know exactly what those concepts are. And rather than hand coding all of those rules for all those situations, the advantage of the meta model is if you have all that data in there, then you can just query the meta model and then run the rules based on what's defined in the meta model.
Great, thank you. Okay, the next question, can or should extension elements be assigned a comprehensive set of relationships from the meta model?
I can take this one if you want, Campbell.
Sure.
So, well, at this point, there's no real means of being able to do that. And not only that, but the meta model isn't even, it's a part of the US GAP taxonomy, but it's not really, can be used within extension taxonomies. So it's not really an available option at the current moment. And I did kind of talk about this at the beginning, in the saying that our longer term vision would be that that extension elements would be assigned or would be anchored to the meta model, and that's where we hope we get with this. It will require the meta model to be more comprehensive than it currently is. And it would also entail a policy change.
Great.
Okay.
Thanks, Dave.
Yep.
And then the last question we have so far is, do you have thoughts about how the meta model could be used in teaching students or non-accountants about financial accounting? And this is from a professor at Penn State.
Okay, I'll have a crack at that one. What we're trying to do is basically capture the accounting relationships in the XBRL taxonomy. So I think this is relevant. It's kind of taking it from the perspective of we've got a model of accounting and if you can define that model in an electronic way, I think that makes things a lot clearer for people to understand. It's like they can see everything in a bigger framework, which I think is important. And if you think about it, financial statements, all of these numbers are all interrelated in some way or another. They're not just standalone facts. It's kind of the whole thing fits together like really is a big graph. And then defining what those relationships are and being explicit about them makes it easier for things like AI to use, but it also means that people can more clearly understand what are the relationships between things rather than having to read it in text or read it in a document. So I think it does help. I think it helps people be able to query as well as like we've shown. So then it helps people or students get an understanding. Not only students, helps everyone get an understanding of what the rules around GAP are and what the standards are and how things are interrelated.
Great,
Yeah.
thank you. Dave, did you want to add to that or?
No, I was just gonna say, no, I had nothing to add.
Okay, so let's go on to our last two CPE questions. So I'm going to go ahead and launch this. How many additional relationships were added to the instant outflow relationships? And the optional responses are almost 200, approximately 90, 6 additions, or almost 1,000. Which do you think is the correct response? I think about another 30 seconds here. Okay, just another 10 seconds here before we close down this poll. All right, I'm going to end this now, and the answer was approximately 90. Okay, so we'll go to our final poll question. How many new relationships were added with the expansion of trait domain, domain member, and trait concept relationships? And the potential answers are approximately 200 new relationships, approximately 2,000 new relationships, or approximately 20 new relationships. Okay, just another 30 seconds. Okay, another 10 seconds. Okay, I'm going to close down this poll. And it looks like we may have one person having a hard time with the CPE question. So if you could just get in touch with us later on for that individual, and we'll figure out how to make that work. Okay, the correct answer to this question is approximately 2,000 or almost 2,000 new relationships. Okay, great. So I want to thank everyone for joining our webinar today. And I would give big thanks to David Shaw from the FASB, Campbell Pride from XBRL US for sharing these insights. And the last thing I want to mention is that we do have an event coming up here called GovFin 2025. This is the third GovFin event that we've been hosting. This is called Designing a Digital Future. And it's going to be held July 30th through 31st. It's a day-and-a-half program in Denver, Colorado. We've got some great speakers lined up. We have Dave Young, who's the Colorado State Treasurer, David M. Walker, the former U.S. Comptroller General. We have Deborah Austin, who is a professor of law at the University of Denver. And we also have other speakers coming to us from the Governmental Accounting Standards Board, the Ohio State Auditor's Office, Washington State Auditor's Office, Colorado State Auditor, and Municipal Securities Rulemaking Board, among others. So please check out the registration page there, xbrl.us/govfin, and learn a little bit more and sign up. We look forward to seeing you. Okay, thanks everyone, and we'll be back with more webinars in future. Have a great day. Bye.